A very good afternoon to everyone, and welcome to Spml Infra Limited's Q1 FY26 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask a question when the presentation concludes. From the senior management, we have with us on the call today Mr. Manoj Tikka, Executive Director and Chief Financial Officer, Mr. Sameer Patel, Chief of Technology and Operations of BESS Operations, and Mr. Vikas Sharma, Vice President, Finance and Accounts. Before we begin the earnings call, I would like to mention that some of the statements made during today's call may be forward-looking in nature and hence may involve risks and uncertainties, including those related to the future financials and operational performance of the company. I would now like to hand over the call to Mr. Manoj Tikka for his opening remarks. Thank you, and over to you, sir.
Thanks, Devanshi. Good afternoon and welcome to everybody. Warm welcome to all of you for the Q1 26 earnings call of Spml Infra Ltd. We have entered the new fiscal year on a strong footing, both operationally and strategically. The momentum built over financial year 2025 was continuing to this quarter, and we are happy with the progress across order inflow, execution, balance sheet strengthening, and new opportunities. So we are delighted to have Mr. Sameer Patel, the Chief Technology and Operating Officers of our BESS division. His expertise and leadership will play a pivotal role in driving SPML next phase of innovation and growth in energy storage system. India remains one of the world's fastest growing large economies. Business confidence is improving and growth across industries. Infrastructure development continues to be at the core of India's long-term growth narrative. The government backed multi-year project finance for significant investment of pipe, water supply, and rural and urban households, large-scale wastewater treatment facility, smart city infrastructure, and clean energy transition program. The water sector is witnessing continuous focus growth through national mission like the Jal Jeevan Mission, and that aims to provide safe drinking water to all the rural houses. With more than 15.64 crore houses already connected with the functional tap water connection, the deadline now extended to 2028 the pan-India coverage. For business like ours, this is not merely a policy milestone, it is a crucial long-term opportunity. Along with the Jal Jeevan Mission, through 2.0, Namami Gange irrigation program, river linking projects, including the Indus River diversion, Ken Betwa, Bati, Kali Sindhi, Chambal, national focus on the water system, even added momentum. The power sector is also going through a revolutionary change. The government of India has an ambitious goal on achieving 500 gigawatt of renewable capacity by 2030 and net zero emission by 2070. This scale up hence required strong grid infrastructure and massive energy storage development. As renewable penetration rises, the new growth will be a safe for battery energy storage system, BESS. This is a growth prospect, both in water and policy. And for us, water and power remains two of the most critical pillars of growth. SPML Infra enters the financial year 2026 with a strong operational moment and a strategic direction. With over 4 decades of experience, we are strategically positioned to contribute meaningfully to the national mission. Our expertise in developing large-scale water infrastructure plays a strong position to support the government push for the universal water access to all. However, we sought to temporary disturbance, election-related project delay, and the hold on Jal Jeevan Mission extension in 2025. This were time not extension. Program has since been extended in the union budget. That said, we are now seeing clear sign of recovery from Q2 onwards. For financial year 26 has begun a strong note and momentum is visible. The inflow have also strengthened. Includes to 1,073 crore project by Indore Municipal Corporation for the augmentation of the water supply system under the Amrut 2.0 for Indore city. Another order of 385 crore project in KP Rajasthan, 264 crore in crore JP project in Chennai. Order Total order inflow of rupees 4,000 to 5,000 crore coming up in during financial year 2026. Our orders stand at around rupees 4,500 crore. Additionally, we are running around 2,200 crore worth of projects backed by supportive government scheme in an improvement business environment. We expect strong order conversion in Q2 of the current fiscal for the current L1 order trends during the current year, creating clear visibility for execution and top line growth going ahead. The company will continue to be focused for high margin order, full funding, easy to operate into the recent project. Now coming to the power sector, it is going tremendous by a new growth frontier emerging in the form of BESS. Recognizing this early, we have made a strategic clear entry into the BESS segment, which presents us with a clear competitive edge, enabling us to win market shares in a sector that is likely to grow exponentially over the coming decades. Coupled with our robust EPC strength, long-term relationship with utilities, confident to providing renewable plus storage solution scale. This will not only diversify the business beyond traditional EPC, but also place it's right at the center of India energy transition. We expect strong contribution from this segment starting financial year 27. And in the coming years, we aim to generate an equal share of turnover from both water and power segment, which is a key national focus area. This will also give us a leveraging our immense focus in both the booming sector of water and power. We already have exclusive partnership with leading US-based global leaders in energy storage system, Energy World acquired 25 acres land for a manufacturing facility in Pune, DC, Maharashtra, which offers incentive for manufacturing unit focused on energy storage and renewable energy, making the ideal hub for a DSS plant. The plant will be commissioning in two phases, 2.5 gigawatt by Q1 financial year 27, 5 gigawatt capacity financial year 28. With a total investment of around 170 crore, for which the company has already generated the liquidity or preferential allotment into non-accruals. This depth of engagement ensures that we can deliver BES solution at a global platforms benchmark from the day one. This partnership position us with a clear advantage in large EPC vendors by enabling localized products and faster adoption of clean energy infrastructure in India with advanced US technology collaboration with Energy World. Coming to the financial performance, on a standalone basis, we recorded a revenue of rupees 172.9 crore in Q1 financial year 26 as compared to 200.7 crore in Q4 financial year 25. Our EBITDA has recorded at rupees 24.3 crore compared to 22.3 crore in the corresponding quarter last year. We recorded a PAT of 12.2 crore was compared to 11.8 crore in the last quarter. So for Q1 financial year 26, our EBITDA margin and PAT margin grew from last quarter to 14% and 7% respectively, which is in line with our EBITDA margin. While Q1 performance was softer compared to the last year, it's important to note for an EPC company like ours, no indicator is future growth in the order book. And I am pleased to say that our order book continue to grow steadily. Typically, Q2 is the quarter impacted by monsoon-related slowdown. However, this year, certain region experienced usually heavy rain in Q1 itself, which has temporarily affected on execution pace. The increasing share of new order in our execution mix, we expect the improvement in the margin and the sizable growth in the operation in Q2 onwards. Also like to clarify that the other income of rupees 17 crore in our PNL primarily relate to the deferred income of rupees 9.03 crore from the debt resolution. The company opted for the second scenario, option rupees 700 crore versus 967 crore. Differential is being recognized as gain over the repayment period of the debt. This gain will be offset against the deferred interest of rupees 8.67 crore reflected in the interest cost other than the other income, mainly consisting of interest income. If the company earns in the normal course of business from this, their margin money in the bank for the banking facility. The company's current debt stands at approximately rupees 407 crore, payable in 6 years inclusive of interest, which is entirely backed by the arbitration amount to rupees 636 crore and additional claim totaling to rupees 4,609 crore till date. Based on the historical trend, the company expects a conversion of claim to award worth of around 1,500 crore. Therefore, for all our practical purpose, there is no cash outflow pressure on the companies for debt repayment or interest servicing from the operational cash flow. However, the company has been making additional repayment to NARCL to reduce the outstanding debt. It has paid 23 crore ahead the schedule timeline agreed with RCL and plan to continue with this practice in the current year, supported by improved liquidity. After receiving investment credit rating of BBB minus, we are expecting an improvement credit rating from ICRA by October 2025. Further, the company has obtained the government sanction of rupees 205 crore from one of the leading national bank, which will enhance company's ability to pick the new business. Bank guarantees are a critical requirement for bidding the exam executing the large government project. We are in the process of further enhancement in the limit commencing to the new business. This bank are in processing. The company has focused approach into the water and power segment, which is giving superior positioning in other large EPC player. This has been further benefited by the company's 5 decade and over 700 project execution track record, but with a strong relationship with all the customers, the adoption of high technology into the execution gives the company a sizable growth opportunity going forward. With this, I am opening this forum for any Q&A or any guy. I am here for any question related to finance, anything related to BESS. Samir is here. He will also take the question and reply accordingly.
Thank you, sir. Participants who wish to ask a question may please raise their hand using the React button below. I'll just wait for a few minutes. So we have the first question from Mr. Raman KB. Sir, you may please go ahead. Kindly mention your firm name as well.
Hello, can you hear me?
Yes, sir, you're audible.
Hello, I'm Raman. I'm from Sequent Investment. So my first question is, I just want to understand what's the current order book, and out of the current order book, how much is the legacy book?
This new order of 1,070 crore, the current order book is roughly around 4,500 crore. We have received 4 orders one from in Jharkhand, one in Rajasthan, one in Chennai, and yesterday in the Indore. These all are roughly around 2,500 crore. 2,000 is the legacy order.
2,000 will be the legacy order. And how much time will it take for us to complete the legacy order book?
C order will be completed within 2 to 3 years, and the
Within?
new order also take 3 to 4 years.
Acha, so the entire order book will be completed over the period of 3 years.
3 to 4 years you can take because the last leg and then the commissioning, etc. may take some time. So all this, the current 4,500 crore order book will be completed in 4 years.
And so, on that note itself, what's the L1 order book status, and what's the current bid pipeline, and how much are you expecting the bid pipeline to be converted into order book?
As I told you, the water and power, both the sectors are very growing, and every month there is a tender of 9,000 crore. At the moment, we are in the L1 of roughly around 2,200 crore, which we are expecting to be converted into order by Q2. Maybe the maximum by October, the entire order will get converted. And the new order every year, every month we are bidding. So our target of 4,000 to 5,000 crore orders in a year looks to me quite easily achievable.
Okay, basically, what I wanted to understand was, in the previous call, you mentioned that there was a slowdown in Q4, but you saw strong growth in terms of bid pipeline in Q1 FY26, which was the current quarter, and you were expecting around if I around 2,500 crores worth of order, which was back then L1 to be converted by Q1 and Q2. So I just want to understand, are we still sticking with that, or have we reduced that?
Oh, out of 3,000 crore of order, which we talk about the last quarter, 1,500 has already been converted.
Okay.
Still, we have 1,200 crore of order, which is
Mm-hmm.
under L1. This L1 I am expecting to be converted by September or maximum by October. So that will make roughly around 1,600 crore we got, and this 2,000, roughly around 2,000, 3,500 crore of order will get by
Mm-hmm.
September or October. And we are expecting further order of 1,500 to 2,000 crore by the next 6 months.
Okay.
So that is our target of 4,000 to 5,000 crore order book. As I
Mm-hmm.
told you in my earlier con call also, this company we understood from starts, and we have made a policy that we will not rush for the order book. Although every month there is a order of a tender of 10,000 crore to 15,000 crore in water. But we are
Mm-hmm.
targeting selective to the order quality, where we have made a criteria of funding, criteria of quality of order, criteria of completion of period, and the stage where we are want to bid, and the
Mm-hmm.
support of our escrow partner. So those are the criteria we fulfill, and the profit margin also. So on that basis, we are very selective. So I'm happy that by those criteria, we are meeting 3,500 crore order we have already L1 or achieved. Now balance the next 6 months, I'm very confident to achieve further 1,500 to 2,000 crore to make our yearly target of 5,000 crore.
Oh, okay, sir. So my just one follow-up question with respect to the yesterday's order which we put up. So I just want to understand, is the order which we received yesterday, is that also a 10% plus margin business? And also I have noticed that there will be 100 to 120 crores of recurring revenue in terms of O&M. What are our margins for O&M?
As I told you, any order, if the company is taking, it's a benchmark requirement that more than 20% margin is required. This order we have much more than 20% margin.
Mm-hmm.
Less than 10% margin, we are not taking that. That's our selection criteria. At less than 10% margin, we are not taking the order. Number two, this order has a two part. One is the O&M, one is the execution of order, which is around 650 crore,
Mm-hmm.
670 crore. This we will complete into the 3 years. And then there is a operational and maintenance. It is slightly more profitable compared to the execution. So if you see that 12 to 15% is my execution, 15 to 17% is my O&M.
Okay. So usually the O&M margins are like more than 10%, right?
O&M is always high margin.
Okay, sir. Thank you. I'll just join back into queue.
Thank you, Mr. Raman. Participants who wish to ask a question may please raise their hand using the React button. We have the next question from Mr. Praveen Yadav. So you may please mention your firm name and go ahead with your question.
Yeah, first of all, good afternoon, everyone. Am I audible?
And you are audible, Mr. Yadav.
So first of all, sir, congratulations for good set of numbers. And I have just two questions. One is related to your, water management business. Another one is with the BESS. So in water management business, what kind of, revenue potential you see in a current year, as well as what sort of operating margin improvement you see, as you know, the margins are hovering in between 5-6% and all. So that is number one question. Number two question is with regard to BSS. So in BSS, as you know, it's a big area to tap on, and there are a lot of players, big, small, and mid-size, are betting big in BSS. So what is the moat we have here, and what kind of I mean, in the entire value chain, what we're going to do? Although you have mentioned some, I guess EPC side, or sorry, that conductor side or something. But if you can explain that, what you're going to do in BSS exactly.
First, let me
Yeah.
my question and then I will leave it to you.
Yeah.
Basically, in the water, as I told you, there is a mix of old order and new order. Old order, the margin is roughly around less, 2 to 5%. In the new orders, we are keeping the order more than 12%. You see the Kekri, Konar, even to the Innova, all the orders are more than 10% margin. The way we will complete the entire old order by 2 to 3 years. And this new orders will be completed in 3 to 4 years. So the more we will get, the more contribution of the turnover from the new order, the margin will keep on increasing. So ultimately, maybe after 2 to 3 years, our margin will be around 10%, which are the new orders we are taking. But for the next 2 years, our margin will be a mix of old and new order. So it will range between 7 to 10%. Now,
Hi, good morning. So, with regards to BESS, as I understand, your question is about the moat, right? So, from that perspective, I can say that we have a technological handshake with Energy Gold, who is Nasdaq listed in USA. So, we have a proven trial tested sort of solution, which is globally deployed across the world. And we have AC block and DC block technologies. So this is the technology we are bringing to India, and I don't think anyone else in India is doing that. Especially on the AC block, where it's like a plug and play sort of technology. You can easily, integrate with the existing systems without incurring any heavy, sort of integration costs. So that is one thing. From technological standpoint, we have a proven trial tested sort of solution. Second thing is that we are setting up manufacturing footprint, as what Mr. Manoj said, within the Pune location. And I expect this to be operational within Q1 next year. So we are in the front run, or let's say we are kind of well advanced in terms of manufacturing and developing the ecosystem, from localization perspective. So currently, if you see the market synopsis, most of the players are kind of importing the entire BESS container, mainly from China. So you can say this is more like 90 to 95% of this commodity is actually getting imported. What SPML is doing different is we are trying to localize this. So this is going to be sort of an import substitute for the entire container. And this adds the value to the existing ecosystem. So you're talking about roughly 60 to 70% of the commodities, sourced locally within India. So this is the unique, distinct advantage which we are trying to create. I hope that answers your question.
Mr. Praveen?
Mute again.
Sir, I believe his question was answered.
Yeah, sure. Thank you. So we can move on.
So we have the next question from Mr. Merchant. You may please go ahead, sir.
Yes. See, myself, Mohammad Afzal, merchant. My question is related to battery storage business, which we are establishing. So, from what stage we are establishing the business? Are we going to import the battery cells, or battery cells are also to be produced in India, or from what stage we are planning?
So, let me start. So if we talk about the supply chain of the BESS, almost 20% of the commodities, critical commodities, will be imported, right? And cell is one of them where from a from a technological standpoint, India is not ready to manufacture cells for BESS. I know that there's quite a lot of development going on, but even transiting that to maturity will take 2 to 3 years. So for that time frame, we have to source from from China or Indonesia or Malaysia. We have to source that. Once India is ready with making India cells, we can easily swap over and consume that within India.
Okay. Second question is that if we are going to import battery cells, do we have any tie-up with Energy Vault in this regard, or we are going to China only for imports?
We do have tie-up with Energy Vault for the entire system, which gives us the unique advantage of getting a cost competitiveness. So the cells itself via Energy Vault handshake will be sourced from China through top 3 tier supplier.
Okay, okay. So I want to understand that whatever we are talking regarding the revenue, 5,000 crore revenue, will be for the current financial year or next financial year.
Here I want to add basically the 5,000 crore revenue visibility and possibility of this will be on the 5 gigawatt plant. At the moment we are setting up a 2.5 gigawatt plant. The ramp up will happen in the due course of time, but that this plant can generate the revenue of 2,500. 1 gigawatt is around 1,000 crore. So we are setting up 0.5 now and increasing it to 5 by next year. By next year will be by 2.5, and next to next year we will be on 5. So that will give the generation revenue ability. This 5,000 crore of the water what we have, it will be executed into 3 years, 2 to 4 years. So that's the way revenue will be spread.
Okay. And regarding pump storage hydroelectricity, is this pump storage hydroelectricity also connected with BESS, or pumps storage hydroelectricity is a separate business?
Storage hydroelectricity is the power generation, another facility like you have hydro, like you have thermal, like you have solar. Pump hydro is another way to generate the power. Yes, that also may require the BESS. So any energy which require the storage of energy, any power plant which require the storage of energy, there is where the base will come into the picture. So base is the storage additional facility into the power. Pump storage is another power generation unit which has started recently generate the power by doing the pump station. So that's the separate facility. Yes, that will also require the BESS.
Okay, okay. And one more question regarding water business. Our water business is like B2G. Okay. So in this B2G business, what de-risking means parameters we are establishing so that or by through diversification of geography, because there is a lot of risk in B2G business.
See, the water is primarily, it is a government subject. It is not the private subject in India till date. So water has related, there are few things in the water. One is the water connection, which is drinking water. Second is to have the irrigation water. Third is the water which required for the linking of the river. That is the third facility which is required. And fourth is the wastewater treatment. So there are various water requirement which is there, and various schemes are there for the different water and even mission. It's only for drinking water. Like the Amrut is mainly for the irrigation water, and to some extent to the bulk water also. So these are the water system which we have, and various schemes are running on that basis, and we are taking the order accordingly. Our preferred order is as we set up the guideline internally that we will not take the order where the margin is less than 10%, we will not take the order. There are various competitive orders where they are going very low. We are not going to take. Our margin is more than 10%, then only we are going to take. We are going to take the states where it is easy to operate. We are going to take the order which is where we have the good support from our suppliers, like the pipe supplier, etc. We have with the Welspun, Jindal Shaw. These are the pipe suppliers where we have a very strong and long relationship. So these are the where we have the where we are getting the support from these partners. We are also seeing that where it is fully funded, because that is our prime criteria taking any order, that whether it is fully funded or not. If it's fully funded project, having a high margin, having the commercial in such a way that we can give the price through of certain cost. And if it is for the bulk where the water supply, our contractor or suppliers is supporting us, we are taking only those type of projects. We are not incurring. As I told you at the beginning, the SPML this time is not focusing into the order book. We are focusing more into the bottom line, that is our margin, more towards the quality of order. Like I am telling you, this Indore, it's a unique India. I don't think any company in India or even 2, 3 company of the world have this type of water project which we got, which required the 400 TPT MTP water treatment plant, and we have the technology driven this plant which will generate the water and will improve the water quality and reach to the Indore city on a very specific terms. So this is this type of unique project where there is a limited player to play, and there the margins are high. We are only selecting those type of project into our this thing. So we are very selective on those.
Okay, okay. So, and one more question regarding arbitration targets. What are the targets of receivables in this financial year?
Arbitration, as I told you, there is a roughly around 640 crore of arbitration award where the interest is accumulated up to 31st March 2025. Every day we are accumulating the interest into this arbitration award. All are at various stages, like one arbitration award of roughly around 200 crore is at the Supreme Court level. So I hopefully by this year we may get that arbitration award. If that gets the arbitration award, by next year we may get the money into that also. So all the arbitration award which are there at very advanced stage, at different level of the court. As soon as we keep on getting, keep the reduction into the RCL dues and 25% we are also getting towards our liquidity improvement. So all are in track. We have the time from NARCL still 6 years for the payment of the dues. We are expecting arbitration award they require roughly around 400 crore, expecting the arbitration award to be received in 4 years, and that will be along with the interest, so roughly around 800 crore. So we have a cushion into the arbitration awards for the payment to the NARCL and further for the improvement into the liquidity. Further, we have roughly around 4,600 crore of claims which are going to be converted into arbitration award. If we see the past track, 40% of the claim to award we are getting conversion, so around 1,500 crore of further visibility of the arbitration award that are going to be come to the company in next 6 to 8 years. That will further improve the liquidity into the company. And in the meantime, if there is another scheme like Vivad Se Vishwas last year has happened, it was a grand success scheme of the government. That happened, then we will get the arbitration receipt much in advance compared to, because then the settlement will be immediately. It will not go up to the Supreme Court or High Court level. They will settle and we will get the money.
Okay. And my last question is regarding BESS. What differentiation in offering we have against the competition in the market?
So, the differentiation which we have is the AC block and the DC block, which I mentioned earlier on. So we have two different technologies, unique technologies, and currently what's happening in India is DC block technology. So the uniqueness is we are offering both customizable to any sort of capacity which the customer might demand. So this is one of the uniqueness we are bringing to the energy sector.
Here I want to add one more. US is famous for their technology and their upgrade into the technology. And BESS is a highly technology driven industry. That's one of the reasons why we have selected the US partners, because the US partners are really famous for their technology improvement. And they will keep on doing the improvement on the technology which BESS will have. And that benefit we will keep on getting in the next few years.
Okay, thank you.
Thank you. Participants who wish to ask a question may please raise their hand using the React button. We have the next question from Mr. Raj Mantri. So you may unmute and please go ahead with your question.
Hi, Raj. Unmute kar.
So we'll take the next question. We
Yeah.
have next question from Mr. Rajesh Nayak. So you may please go ahead.
Hi, Rajesh.
Hi, good afternoon. So my
Yeah.
basic question was whether our MIDC land has been fully allocated to us and whether the construction has been started over there or how is it?
So yes, we have the land, we have the possession, and we have finalized the layout. So it's submitted to the relevant departments of New York. So the construction we are anticipating to kickstart from early next month.
Okay, so are we in line with the production line or how is it?
Yes, it's in line with that, and we are on track. We are hoping by end of Q1 the infrastructure will be ready. We'll have some volumes coming out from that.
Okay. And related to compliance, so what all compliance is required for our best type of business?
So we have two sort of compliance. One is the factory regulations, and the other one is the certifications from a safety perspective, right? So the factory compliance is with MIDC, and from time to time, as the construction keeps on, maturing, we'll submit the relevant documents to get that approved by the regulatory. That's one thing. And from a certification standpoint for the product itself, we are focusing more on the safety aspects as per the Ministry of Power guidelines. Mainly, it's the UN and UL and IC certifications. So that we already have from Energy World. So once we deploy the final product to the site, we'll revalidate that.
Okay. One more thing was like whether we are doing energy storage as a service or build on operate means boot type of this thing, or currently we are focused on only EPC based delivery only.
Only EPC, but all the options are available.
Okay.
Based on the requirement, all the options are available, but at the time we are looking into the EPC.
Okay. Done. So that means we are okay with the first quarter of the next year, financial year. We will be having some revenue from this business, best business.
We are targeting as a EPC some base order into this financial year itself. If we take. Otherwise, next year, so definitely with our plant we will.
Oh, great. Thanks a lot. That's it for me.
Thank you.
Thank you. Participants who wish to ask a question may please raise their hand using the react button. We have the next question from Ms. Nisheta. Please go ahead.
Yeah, hello, good afternoon.
Hello, Nishita.
I'm Nishita from Sapphire Capital. I had a follow-up question on one of the previous participants. You mentioned that there's a 5,000 crore revenue visibility from the 5 gigawatt plant. And the 5 gigawatt plant we are supposed to be done by FY28. So I just wanted to understand that this revenue guidance is just from that plant. So what is the overall revenue guidance that you would give for FY28, 27?
This is the amount which we say that the 5 gigawatt plant can have the revenue generation capacity, because then we can set up the base facility and as an EPC for 5,000 crore. But I'm not telling that the 2028 which will be 5,000 crore. It can go and it will require the ramp of the base facility to have to 5,000 crore. Into the water, we will have, there are two units. One is the power and second is the water. In the water, we will have the target of taking the 5,000 crore of order book every year. This year also we have the target for 5,000 crore of order book. If it is a 5,000 crore order book, it will be completed into 3 to 4 years. That is the timeline of the order to execute. And every year we will keep on getting the 5,000 crore. That is our minimum target, which we are targeting to give them. And from that, you can analyze that how the target and how the revenue will grow in the power sector, in the water sector. In the power sectors, based on the ramp up of the base facility, the revenue will keep on growing. We have the target that by 2029 or 30, we should have the water and power revenue more or less similar.
Okay, understood. Thank you so much.
Thank you. We have Mr. Raj back in queue. So you may unmute your line and go ahead with your question.
Hello. Hello, am I audible? So, like my first question would be from in the BESS segment. So we are going to import BWAT software, which is a containerized solution. So what we are going to import from China then?
So from supply chain perspective, we are going to import cells as a primary commodity. And we are also going to import the cooling systems to start with for the next year. But then we are going to outsource and localize these commodities in the long term. So within 2 to 3 years, almost 70% of these commodities will be localized. So for a start, we are going to import most of the commodities. I would say probably 70% will be import, but then that will be flipped over to 70% localized within India in the next 2 to 3 years.
Okay. And second question would be, so actually I saw the press release by Energy Volt regarding the agreement with SPML, and they had mentioned initial 500 megawatt of capacity of $100 million to be delivered under equipment contracts over next 12 months. And in the previous con call, you had actually mentioned we are going to purchase BWord software for $4 million. So can you reconcile both the figures?
What what this basically up to the 500, basically they will help us to generate the BSS facility. And that is continuing. So we are targeting few orders where we will basically the energy vault not only giving the technology, they are also supporting us and helping us to have the facility infrastructure completed. And basically all our base which we will manufacture, we will do the EPC of the base. They will also help us in handholding our system aligned and our all the infrastructure placed.
Okay, so I mean, what sort of revenue we will provide to BVolt, other than that 4 million that were previously mentioned in the con call, in the previous con call?
Then is their royalty. That is 1.75. No, 1.72% royalty.
Okay, and that 4 million would be expense through PNL or it will be capitalized in the balance sheet?
It's a technology cost and it is a base cost. So it will not be P&L.
Okay, and like has someone shown interest or had given orders like for EPC in BSS domain to SPML?
Participated into various tenders. Let's see what the result comes.
Okay, sir. And my last question, like, could you brief about unit economics in BESS business? Like, what would be the cost per megawatt hour or gigawatt hour? And how, I mean, ROC regarding this business and the break even.
As I told you, that is a container cost is basically one. If it is a five megawatt container, so roughly around 5 crore container. And there is a cycle time of 8,000 cycles. There is a charge and discharge. And the various calculation comes into that. So I can say the cost of BESS in all aspect to the renewable energy which will install is between around 90 paisa to 130 paisa in bit 1 rupees 30 paisa. That will be the cost. And that is where they will have the differential of the unit rate from the peak and non-peak time. That is their advantage. So that's the way they will do. We will all the EPC if we do on the BESS, we will have the margin. It is our minimum targeted margin more than 10%. Otherwise, EPC we will not take BESS, EPS, EPC also. When we will have our component manufacturing of a battery pack, then our margin will increase to 15 to 16%. That's the BESS economics going forward with our revenue.
And by like what, by how much time we will achieve the break even in battery manufacturing, in battery pack manufacturing?
Break even, I think it should be in 1 year itself.
Okay, sir. Thank you.
Thank you. We have the next question from Mr. Tushar Sarda. Please go ahead, sir.
Yeah, thank you. Thank you for the opportunity. I carrying on the previous question. So, are you going to sell BESS pack to people who are doing this renewable energy project, or are you going to take up the project and own the pack and get a recurring revenue? I'm not very clear on that.
We will sell the container, which will utilize the BESS pack. this battery pack will utilize into the container. If you see the container cost, major cost of the container is battery pack. Roughly around 40% cost is the battery pack, and that we are manufacturing.
So you are selling that, right? So you will
No,
get
we will
that.
sell the container. We will sell the container. That is our target.
Okay. So what is the working capital and margins going to be in this business?
Working capital in the BESS only we will require the LC limit, for which at appropriate time we will discuss with the bank, because bank are supporting us. And the, that LC limit and the timeline of the LC will be sufficient. I don't think in the BESS also we will require any fund-based limit. It's mainly the LC limit we will require, like we require the BG limit for our EPCs.
Okay. Okay. Thank you.
Thank you. We have the next question from Mr. Pratham Modi. So you may unmute and go ahead with your question.
Hello, sir. Good afternoon. My name is Pratham Modi and I am from HPMG Shares and Securities. So my question is, as you mentioned in the call that you will have the BESS capacity of 2.5 gigawatt next year. Would you please share a total capex for this capacity?
For the 2.5, it is 125 crore, including the land, etc. And if it is going to 5 gigawatt, then it is 175. Till now, that is the cost, which we are funding through our own. 125 we are funding through our own equity, which we have generated from the preferential allotment.
Pratham, I hope that answers your question. We have a follow-up question from Mr. Raman KV. You may please go ahead, sir.
Hello, sir. Can you hear me?
Yeah.
So, I have a doubt with respect to BESS itself. Sir, I just want to understand what is the current total addressable market size in India with respect to this BESS battery container which you are planning to sell?
The market size currently in India, if you think about the top players, it's about 30 gigawatt. Okay. In the next 5 years, it's going to ramp up like a banana curve to 236 gigawatt. You know, so we are in the early phases where we are pitching in via 2.5 gigawatt manufacturing capacity, right? And so in the next 1 year, this is what I'm expecting to sort of launch.
Mm-hmm.
Then once we have fully productionized 2.5 gigawatt capacity, that's like 2 containers per, if you do the maths.
Mm-hmm.
Then we are going to ramp it up to 5 gigawatt after that. That's the next phase 2, which will be another 1 to 1.5 years, right? So we'll have, let's say, from now until 2.5 to 3 years, we'll have a total capacity of 5 gigawatt. Okay.
Mm-hmm.
But still, that doesn't meet the 236 gigawatt demand, because we will also have competitors within the space. So our target is to move from 5 to 10 immediately after that as well. So if you see from a ramp up perspective, we will start with 2.5, then we will go to 5 giga and straight to 10 giga, long term bet. So this is the way we are scale up.
And sir, I just want to understand, you announced what's the capex required for the 2.5 gigawatt of manufacturing plant which you are planning to establish in Pune. I mean, you have said that the capex is 175 crores, if I'm right. Does this include the land cost also, which we received from MITC?
175 is for the 5 giga. So 125 is the 2.5 gigawatt. This includes the land cost also.
That's inclusive of the land cost, and this is entirely funded from preferential allotment, right?
25 first phase we have funded through the preferential. Second phase also we have the liquidity, but that time we can think of any other. But till now, both the phases are from the preferential.
And sir, with respect to this thing, margins, how much margins are you expecting from BESS? And once, as you mentioned, this you are planning to start commercial operation by the end of Q1 FY27. How much time will it take for us to ramp it up to, optimization level?
So, in terms of optimizing and scaling it up, so by end of Q1, we will start manufacturing, the containers. So my anticipation is depending on the order book and depending on how quickly we can get the tenders, awarded, you can ramp it up within 3 to 4 months immediately, full capacity.
Okay, so. And sir, I just have one doubt. You initially mentioned that you have a technology tie-up with a Nasdaq listed company. What's the company's name?
Energy board.
We
Energy board.
and
Energy board.
okay, thank you, sir.
Thank you. We have a follow-up question from Mr. Rajesh Naik. You may please go ahead. Answer, I would request you, due to time constraints, kindly limit your question to only one question.
Yeah, thanks again for the opportunity. Could you please share the timeline or plan for converting this preferential issue into regular listed equity? Is there any specific lock-in period or regulatory milestones you are waiting for?
That is, we have two preferential, the warrants are going on. One is going to come in November, another is going to come in the April. That includes the promoter also, which we want to start funding to the company well before.
And what will be the lock-in period?
6 months, that is as per the law.
Okay, done. Thanks. Thanks.
Thank you. We have a follow-up question from Mr. Tushar Sarda. You may please go ahead, sir.
Yeah, thanks for the opportunity again. I'm back on that working capital thing because we're going to import so many parts for BESS, and the turnover is fairly high. It's like 1,000 crore per gigawatt, right? So if you're at 2.5 crore, and roughly if I take 25% kind of working capital requirement, then it comes to 600-700 crore. Would my understanding be right, or you think?
No, it is not right, because it's every month production and it keep on going. So roughly the requirement will be for the 2.5 gigawatt, our requirement will be roughly around 150 to 200 crore of LC limit that we have already done.
No, LC limit I understand, but inventory you will need to carry, right? Because there is transit time and all that.
Because it's order base which will keep on going.
So you don't think it will be more than 200 crore?
That LC limit, that more than that working capital is not required.
So what is the ROC and ROE for this BESS project that one should factor in?
See, these are the technology-driven projects. So the technology-driven projects is a high margin project and it's having very high ROC and ROE.
So probably north of 40%?
Forward when it will be established.
Sorry, I didn't get your answer.
And go more than that when it is established.
It will go more than 40%. Okay. Yeah, that's what I wanted to know. Thank you so much.
Thank you, Mr. Tushar. We'll take the final question from Mr. Pratham Modi. You may please go ahead.
Thank you for the opportunity. Sir, the 175 crore capex for the 5 gigawatt plant is expected to generate an estimated revenue of 5,000 crore, which result in an approximate asset turnover ratio of 28.57. Could you kindly provide more details or clarify how this asset turnover ratio is achieved?
This is the EPC. When, like in our EPC, if we are making the 5,000 crore turnover, we don't have to have any asset in the water. The same way power, we are setting up the BESS facility. And then rest of the things we are doing the EPC. So you can't consider the asset turnover compared to our plant and capex required. Capex there. The BESS plant, based on the order, will keep on generating the battery, that is, battery storage container on the EPC basis. So that's no correlation in the EPC with the asset turnover. Am I clear on that? Like water, we are making 5,000 crore turnover. We may be in a 2 to 3 years. If all the orders keep on going and we will keep on generating, then there will be, if suppose 5,000 crore of order book. It's on the EPC. It will keep on. We are keep on producing. We will keep on getting the money. And the asset is our technology, our manpower, and that's the asset. The same way BESS, we will set up the battery plant unit, and then rest is the EPC. So there is no direct correlation with the turnover versus the asset.
Okay, sir. That's helpful. Thank you so much.
Thank you. As there are no further questions, I would now like to hand over the call to the management for their closing remarks.
It's very much. I feel water is very high in the Mumbai. Thank you very much for everybody for taking this time to join us today. We are encouraged by the positive moment observed in Q2 with healthy order inflow and robust pipeline of vendors. We remain optimistic about the opportunities that is ahead. Current order book combined with L1 position and successful bid in strategically targeted tenders provides a strong foundation for substantial profitability and revenue growth. Three, negative in involving global and economic environment. Navigating to the involving global and economic environment, our continued focus on critical sectors such as water and clean energy, backed by our execution capability and disciplined financial approach, position as well for the sustainable growth in financial year 26 and beyond. Once again, thank you for all your continuing support and confidence in our journey. We look forward to sharing our progress with you in coming quarters. Thank you very much.
Thank you so much.
Thank you all for joining the call. You may disconnect your lines.
Thank you.